In this video, I want to talk about stocks to hold in a higher inflation environment. We learned a few days ago, a few weeks ago, that inflation is sticky in the US. Inflation is likely to stay in this 3%, 4% range. So what is the best kind of stock I would recommend in this inflationary era? It's unlikely that inflation will go down substantially like we've seen for the past 10 years. Because of the world we live in, we have to adapt. So how do you adapt your portfolio? I have a couple of stocks to recommend, high margins, recurring business models that I'm sure will do fine in the coming years, and you will have my take on these companies. In case this is your first video from this YouTube channel, welcome. My name is Christophe Nour. I've been investing in the stock market for almost a decade now, and I have achieved a performance of 25% per year, and I own some of these businesses. So obviously I will be biased. Let's start. If you want to invest in an inflationary era environment, the first business I would definitely recommend are royalty businesses. Royalty collectors like TPL and Landbridge. In case you are not familiar with these businesses, I will show you the financials and what they do. Basically, TPL stands for Texas Pacific Land and LB for Landbridge. These two companies own lands in Texas. It turns out that being a land owner is very profitable because of all the infrastructure that is being built in this land, on this land. You can drill some oil, you can use some of the water, you can build data centers on this land, and if you just own the lands, you just collect the royalties. You don't incur the cost, you don't build the capex, you just enjoy the land, enjoy the royalty revenue that is coming in. And if we have inflation, if you have a lot of cost, you will not suffer. This is the reason why royalties businesses are so great when with the world in a world with a lot of inflation. You don't have higher costs, so you just have revenue coming in, and that is directly to the bottom line. If you check Texas Pacific Land and if you check the margins, you see that they have gross margins of 90%, no cost, operating margins of 80%, then the margin of 65%. It will fluctuate. Sometimes it will be higher, lower, and if you check the stock price, it is, it's a better performance than Google, Amazon, and it's not a tech company at all. They just own lands in Texas. If you check the financials, look at the revenue. Revenue up and to the right. Net income is very, very high. They have very, very high margins. If you compare the free cash flow to the net income, you see that the green, look at this, the green line and the blue line are similar. The charts are very similar because there is no capex. There is no reinvestment. There is no moat to defend. They have an infinite moat. They have the land. Nobody can steal their moat. You can't take the market share. So they have the absolute moat, absolute pricing power, absolute competitive advantage, and all the revenue is flowing to the bottom line, to the net income, free cash flow. And what do you do with the free cash flow? You accumulate the cash on the balance sheet. The company has no debt at all. And you do some buybacks. Look at this. They bought back 2%, 3% of their shares. And you do some dividends. That's it. You just reward shareholders with all the cash you have. They don't have any debt. They don't have much risk of disruption with AI. You will drill the oil situated in Texas, and you need infrastructure, roads, factories, facilities over there. And every time you build a road, you have to pay a royalty to TPL. Every time you build a factory, you have to pay a royalty. Every time you want to, in the future, you will maybe see more data centers in the US. Every time you build the infrastructure, data center, but also water infrastructure that goes with it, you pay a royalty to TPL. That is great. And the only thing that you should monitor is the price paid. You pay them at an attractive price, and that's fine. Now I would say the PE ratio for TPL is a little bit higher than 50, but it will fluctuate. The stock price can fluctuate over the short term. In 2020, the PE ratio was 20. In 2023, the PE ratio was 25. It can happen. TPL is on my watch list. I will monitor, and if the stock drops, I will buy it. I will maybe make a video out of this. So very efficient, high margin, long runway. TPL is a business that was created, officially in 1888. At the time the world was very different, and the business is just holding 900,000 acres of lands in Texas. And if you were invested in this business for the past 20 years, you would have become a very wealthy, a very happy shareholder. Definitely a stock that will benefit a lot in inflation because of its lack of costs. And if another tailwind for this business could be that high inflation most of the time leads to higher commodity prices, right? Higher oil prices. If the price of oil is higher, the royalty will be higher for TPL, because every time there is some drilling activity, they get a royalty. So if there is more higher oil prices, more revenue, more volume, more water being processed, they get a royalty. More activity in Texas means more royalty for TPL. So this is the perfect inflation hedge. I would say this is my number one inflation hedge if we enter an era with a 3-4% inflation rate for future years. This is just amazing, and the company has zero costs. The second company on this list is Landbridge. Similarly, Landbridge is a company that has some lands in Texas, and the margins are the same. Let me check this. Landbridge. Oh, come on, what is happening? They don't really focus on oil and gas. They focus on water, right? But in the same process of drilling oil, you need a lot of water. So same trend over here. And the company IPO'd in 2024. The company was public in 2024. So because they became public in 2024, they have costs related to the IPO. These are one-off costs they won't incur in the future. They won't be here in the future. You see that the net income has been negative here. You see stock-based compensation. Yeah, they give stock options to employee. They raised some cash. Don't take these figures likely just like this. Please take a second look to the cash flows. This is just a phenomenal business model. A little bit different from TPL. First, it's a recent business. Secondly, they take some debt to acquire more land. So their growth acquisitions, the way they get growth over time is through acquisitions at the moment. So a little bit different from TPL that doesn't have any debt. The valuation is a forward PE ratio of 35, roughly. So valuation is a bit cheaper than TPL. That's another difference. And fourth difference is the way Landbridge has some lands. I told you they have little oil and gas activity and a focus on water. Another future focus in coming years is potential data centers installed in their lands, on their lands. The way Landbridge has their lands is contiguous land. So you have a big chunk of lands and you can build a lot of data centers over there. That's not the same for TPL. TPL is much more a checkerboard type of lands. A little bit of land over here, and then over there, and then over there, and then over there. So you don't have a big chunk of load. For Landbridge, that's different. So you have a few differences here and there. But roughly speaking, we are talking about a business businesses with high margins, zero capex, almost zero cost, a long runway. It's a royalty business. Nobody can take away from there. I mean, you can't lose market share, and you own the lands, and you can grow forever for decades and decades. So that's my go-to investments. I recently sold my TPL. I was a shareholder in the past, and because of valuation, the business has become too expensive. I sold it, and I bought Landbridge. So I'm invested in this kind of businesses. By the way, if you're looking for a complete framework to analyze stocks and build a strong portfolio, I have a coaching program. More on that at the end of the video. The second kind of businesses I want to share with you are payment processors like Visa and MasterCard. You know Visa, you know MasterCard. I want to make you a description of what they do. They are like a royalty payment business. If you have more volume of transactions in this world, they get a small take. So if the world is becoming more digital, more transactions, more payments, they get a small royalty out of this world development. And this is the reason why the business is so efficient. These businesses are strong. Gross margins of 80%, operating margins at 60%, net margins at 50%. Phenomenal margins for such a simple business model. And the network effect of Visa and MasterCard, this is just huge. If you look at the financials for these two businesses, this is very similar. MasterCard and Visa, you will have the same charts. Revenue going up, high single digits or low single digits over time. Net income over time is going up. They don't have a debt problem. They generate a lot of free cash flow, and they do buybacks with a lot of efficiency. Look at this. This is a buyback program. They are doing buybacks every year, and this is your ROIC over time, your return on invested capital, efficiency of 25% per year. A small dividend. The PE ratio for Visa is around 30. Okay, not cheap, but not that expensive when you take into account the quality of the business model. And if you have a world with more inflation, they don't care because they are so profitable. They can make as much money as they want. And if the world is getting more developed, more advanced, more digital, more payments, they will just benefit. If you have, they don't have a lot of cost. Frankly, they have gross margins of 80%. Similarly to TPL and Leadbridge, they won't have much more costs if we have inflation, and that is the reason why they can keep their margins. I will show you quickly the chart for MasterCard. MasterCard, big company, similar margins, 80% gross margins, infinite pricing power. The stock price is the same, up and to the right. Net margins of 50%. This is just wonderful. And you look at this, you have revenue going up. Same thing, net income going up, a lot of free cash flow, not a debt problem, a lot of efficiency, small buybacks, and similarly, you have a PE ratio of 35. So very simple businesses to own that will do great in the next 5 years, 10 years. And if we live in a world with higher inflation, 3% inflation, 4% inflation, they will just take a tech rate, a royalty business, and enjoy the ride. And these businesses will make more revenue, more earnings, more free cash flow for the future years. You don't have risks of disruption, AI. I don't believe in the thesis of the blockchain disrupting these payment companies. I think they will adopt these changes and not be disrupted. But this is just a wonderful investment when it comes to inflation. And the third kind of investments I'd like to share are stock exchanges like ICE. ICE is intercontinental exchange. You have a lot of stock exchanges in the world, right? Like you can even say that brokers are big inflation hedges. But I would say, yeah, stock exchanges are a little bit better. These are big businesses, established businesses, and they will make money regardless of the environment. So if we have a lot of inflation, they will do fine. In case you don't know, Intercontinental Exchange, it's an operator of financial exchanges and provides ancillary data products. What can I say to you? No, not a lot of information for you. Mortgage, series of acquisitions. Yeah, okay. Exchange business is the major part of revenue. Nice margins. We are not talking about a gross margin of 80%, but still nice margins. Operating margins, really nice. Net margins of 20%, really nice. If I look at the growth rate, you see revenue growing nicely, net income growing nicely. They don't have they can have a debt problem. The debt is $20 billion, and they generate, what is the free cash flow they generate? $4 billion, $5 billion. Yeah, they generate $4 billion of free cash flow, so they can pay up the debt in 5 years. Not a lot of issue. They have a market cap of $100 billion. I think they can survive any environment, including inflationary environment. So with the stock exchange, they have almost infinite pricing power. I think they can do really, really well in an inflationary environment. And you can buy this business with a forward PE ratio of 25. Rather cheap. I mean, as I'm speaking, the PE ratio for the S&P 500 is 30. So it's a little bit cheaper than the overall market for a company that is a little bit better than the overall market. Seems good to me. You have other stock exchanges all around the world. You can check this for Singapore, from Chicago, from Warsaw, Europe. You have Euronext. I have not done much research on Euronext. This is one of the first stock I bought when I was 18 years old, because similar situation. You have a business with nice margins, a PE ratio of 17 for this one because it's based in Europe. The revenue is going up and to the right. Net income is going up and to the right. They generate some strong free cash flow. Life is good. Life is good. Frankly, life is good. And yeah, valuation is not that expensive. Okay. And I would like to share some resources for you. Because I had this idea of video because I saw a tweet from somebody called Forever Investing. This is a new Substack, so free shout out to you. Great Substack. You can check this. You can type on the internet Forever Investing Substack. He wrote great articles about TPL, Landbridge, Visa. You have ASML. You have these big companies that do well in inflationary environment. So great stuff. Another resource I really recommend is Horizon Kinetics. If you don't know Horizon Kinetics, that's a fund led by Murray Stoll, and they invested in TPL in 1995. It's been 30 years. These funds spotted the potential of TPL 30 years ago. They are definitely the most expert guys about Texas Pacific Land and royalty businesses. And you know what they say? They love Landbridge. They bought Landbridge shares. They love Visa and MasterCard. And they say, yeah, stock exchanges, great recurring business model. You can't take market share away from them. This is amazing. I think they own all of them, actually. And another resource I recommend to you is Santa Monica Partners. I don't think a lot of people will know what I'm talking about. You have a fund, Santa Monica Partners, led by Larry Goldstein, and Lawrence Goldstein is the second longest shareholder of TPL. I think this is something like this. He has been investing in TPL for 70 years. Now Larry should be 80 years old, 90 years old. I'm not sure, but he is one of the longest shareholders of TPL. So again, he knows the royalty, inflation era, whatever you want. He knows these companies really well. And he invested in MasterCard when MasterCard went public and still holds it. So you can check their portfolio. This is public. Check Santa Monica's portfolio. Type this on Google and you will find it. You will see what they hold and you will take ideas in terms of inflation, hedged. That's wonderful. Same thing for Horizon Kinetics. This is a fund, completely public. Check what they own in their portfolio and you can steal their ideas. This is great. This is completely public. You can take inspiration from them and build your portfolio. If you believe inflation will be here for the coming years, you can say, okay, these guys are experts. They know how to hedge themselves. They know how to deal with inflation. Let me get some ideas and see what is inside their portfolio. You see, oh, I like this one. I like this one. Let me do the due diligence. You do the due diligence. I don't recommend to copy blindly. First, do the due diligence. Okay, revenue, earnings, the moat, the competitive advantage, the valuation. And if you like the valuation and if you like the company, you buy. And you build a great portfolio that will do great, do really well if we have higher inflation for a couple of years. These are great ideas if you think inflation is here to stay. If you like this content, I have an investing coaching program. In this program, you will learn a complete investing process. You will learn how to find good stock ideas, how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio. Additionally, you will have access to my personalized guidance for long-term results. We will do weekly calls where we analyze stocks together, and you will have access to my private number available 24/7 for full support. If you are blocked, if you have any questions, I'm here to help. Click the first link in the description to get more information. You will get a video that explains how everything works completely for free. No need to sign up, no need for your email address. Just click the first link in the description and I'll see you on the other side.